Good afternoon, everyone, and welcome to Monday, September 15th, 2025 edition of Trading Trends ETF edition, market recap style. We're going to recap the day, the past 5 days, and there's been a lot going on. A really big all-time high day today of trading. Let's get into it. Let's get into it. Let's go into the doc. Hope everyone had a wonderful weekend. There's another programming note. I will be doing a video today, obviously, since we're talking. Tomorrow, I'll do stocks edition, and Wednesday, I'll also do an ETF wrap-up edition of the past 5 days. And then I will be back on the 29th of September. Alrighty? So let's get into it. Trading trends today, September 15th, as I said, uranium, metals and mining, and comm stocks led by Google. My gosh, what a huge run by Google today. Lifted the entire sector, communications. It's been on fire. All those spaces jumped pretty significantly, multiple standard deviation, which is why we're talking about it today. While staples and medical devices fall, staples had a decent fall today. Absolutely a risk-on environment. So much risk on. VXX hit a new all-time low. We'll take a look at it. And then here we go. New all-time highs for. Let me get a breath. I feel like gold dust when I do that. Remember gold dust, WWE? Anyway, new all-time high for SPY, QQQ, EFA, GDX, gold, and look at this. XLK, that's tech. XLC, communications. XLY, that's discretionary because of the huge jump in Tesla. SMH, that's the semiconductors. That's the quarterback of the market. MAGs, those concentrated stocks, those top 7, and the XLG, my baby, the top 50. All of those things I just mentioned, today is the highest closes in history and the highest they ever touched today in price. So congratulations if you're long assets. There's a very, very good chance that it went up today to an all-time high. Let's get into it without further ado. What are they coming at you with a great show today. Some really interesting spaces, metals, some equities in terms of tech, obviously. We'll get into it. So Tesla was up a lot more than this. This was off of the news that Elon bought $1 billion of his own stock. This thing was up much higher. Actually, let me see this. Yeah, this touched at pre-market when it was announced. It touched $430. And then we actually, I don't want to do charting on Tesla right here, but after 11:30, the exuberance started to disappear, to be honest, and it closed below VWAP, kind of surprisingly. So, still a good tape, up 3.5%, but it was up far more. And then we did open this morning at $426. SPY closed up about 53 bips. We'll look at that. Closer, Google, like I said, a monster move up 4.5%. I believe they were the third company to be worth at least a couple of $1 trillion at this point. So that trend's going to keep going. Oracle, that compression looks like it may be done now. That gap, we'll see if it continues to be filled. I would still be a little bit patient, but today a nice up day in Oracle, up 3.5%. Again, tech was on fire to new all-time highs. Apple added 1%. Stock looks great now. We said every squirrel gets a nut. The catch-up trades abound. We'll be on Spaces report tomorrow. Join us. It's on X. Meta up 1.2%. Amazon up 1.5%. Microsoft up 1.1%. Broadcom up 1.25%. AMD up a little bit more than 1.5%. Just monster gains everywhere. Then China was on fire after Trump's bullish comments, positive, constructive comments about the deal with China. So Bob added 2%, and that stock looks great. So a lot of things working. I know on Friday everything was my ending analysis was give it a little bit 2 weeks for a lot of things. That's probably where we're going to go, but let's see and analyze the charts. So today, opening bar here, we opened at excuse me. Oh, this is not SPY. That's Tesla. And I said, when is SPY $400? Everyone would buy that. Okay, so here is the 9:30 bar. We opened very bullish here, right around 660. We actually peaked. The all-time high came at 11 a.m. We hit $661 there. And we did well for the rest of the day. We did trade underneath the VWAP from 12:30 p.m. Eastern time through 3:30 p.m. And then a nice bit of buying here into the close to close us up just about 0.5% higher. But like I said, the peak came at 11 a.m. As I zoom out here on our SPY chart, I'm going to get rid of that big box here. That carrot right there denotes an all-time high here. We did hit 661.04, 50 cents off the high. You are overbought just by the skin of your teeth here at 70.1 RSI, but we like to see that. Lets us know that the volume and the momentum is real. Not so much volume, but more so momentum. Volume today was actually a little bit below average in terms of SPY as they drifted into the single stocks. A lot of trading in Tesla and Google, as you can imagine. As I zoom out, things look great here. I mean, we keep on upping the estimates, right? We kept on saying, this market wants to go to 653, 65. Now here we are at 660. We're getting a little bit of expansion here. I still think 660 right around here is pretty much a little bit top. I'm not saying this is the end, even by a long shot, but I have been looking for at least about a 2% correction or digestion, I want to say, to about that 646, 647 level. I think very possibly the Fed gives it to you. The market gets what it wants. We got a 25 basis point cut. Maybe Powell says something that the market doesn't like afterwards, and the market has that freak out and says, oh my gosh, the end is near, It's not. We've just been trying to get a digestion of these gains for literally a couple of weeks here. I've been to be frank, I mean, I'm looking at my notes here. If everything was normal cycles, I had said that this market was August 22nd, a peak. Yeah, I mean, by about September 3rd, right around Labor Day, right around here, we should have started probably moving lower. There's no should, but in normal markets, this last 5 days, we've really been exceptionally strong again, going higher where I thought we would have had to take a breather on 652. No, we go to 660. All that being said, as I said, in the next 2-ish weeks or so, probably happens to this week just because the catalyst is possible. But I still see a move towards about 647 in the next 2-ish weeks by the end of September, possibly this week. And that will be your invitation to get into one of the absolute best markets in the world, overbought behavior again. And that's all I'm going to say about that. If you have a ticker, put it in the chat or something. Obviously, very bullish, all-time highs for it almost reminds me of the Barstool Portnoy days when you just pick Scrabble letters, put the ticker in, and the things, and you buy it because the thing's going higher. It's that almost that kind of market. And I guess you should be careful, but you should also be concentrated in some areas because that's where gains really start to multiply. Let us get into what, speaking of multiplying gains, what really moved today. Uranium, massive move, up 9.5%. Take a look at the chart. This is a yearly God candle here. I was having a conversation with a trader, I think it was a couple of weeks ago, and they said, oh, uranium, which way are you? Which way would you be, long or short? And I always let the charts go for itself. And I know I talked to this trader after May, and for me, that is easily a buy. The thing was standing room only to buy from May 12th through the end of June, my golly. And in terms of spot, that means it took it from $27 to $38, and folks said, finally, okay, you know what? Let me give it a little bit of breather. That's exactly what happens. It goes to 42, and they bring it back down to 35, and now, wow, what a beautiful breakaway above 42. Chart looks absolutely great, similar to the market, in my opinion. I don't want to chase it up here. And again, the upper Bollinger Band, it's hard to see, but it actually ends at about 44.70, right around where my cursor is with the vol expansion. So 45, 46 even here. Very rich for the stock. Congrats if you are long uranium. It's been an absolutely spectacular move. 72 RSI, overbought. Stochastic momentum mix as high as it's been in the up channels. I don't want to chase it here. Hopefully, I don't have a broken tape recorder, a broken track record here. Would personally just sit this one out for about 2-ish weeks. Let it consolidate a little bit. Something tells me massive momentum right here, obviously. And look at that candle. The high was 45.98, and that's where it closed. So they were ticked that the bell rang today. This thing likely goes to, 47 or what have you tomorrow. Looks absolutely great. But over 2-ish weeks is where I'd probably want to re-enter with, a call spread going out to December, something like that, if liquid. And I would, like I said, enter this at about 40. I'd do this right about 41 quarter, which is the 21-day exponential moving average. If you're lucky, it's going to test your patience, though. Uranium, absolutely a monster breakout. And wow, just coming off the, you remember the SPY, April 7th, 52-week lows here at 19.5. So if you just bought URA, the stock, the ETF rather, you've got a clean double. Of course, that's, curve fitting low to high, but what an absolute monster move. And all the reasons in the world to break it, to own it above this breakout, above 33.5 in May, or in June rather. Absolutely, I just lots of reasons to buy uranium. So congrats if you're in uranium. New 52-week high today, multiple standard deviation mover today. A lot of trading in uranium. It actually was a very hot area today. 3 standard deviation move. Next, metals and mining was up 4.1%. This is a new 52-week high. Absolutely great looking chart. Did nothing really until June 2nd, and then this thing, honestly, what else can you say? It woke up, and then once you broke above 71, off and to the races is XMA. Now, candle looks very similar, not as big as the uranium one, but they were upset that this bell rang. They closed it 15 cents off the high, so very bullish. Don't want to chase it here also. This isn't straight correlated to beta, so when I say take your foot off the gas, in terms of stuff like Microsoft and metals and mining, it's kind of an overall pause in terms of just getting better positioning. But also look at this clean, going back to XME, look at this clean above 50 RSI trading since April 23rd. Just really, you like to see that. It's almost giving a couple innings to start. And then right here, once it breaks above the 200-day moving average, and it's already had that history of it trading above the 50 RSI, you want to give it the benefit of the doubt right here around Memorial Day at $60 even. And then when you, like I said, you get that breakout above $69.5, $70, it's beautiful. Breakaway up and higher. That being said, don't want to touch it. Like I said, for the next 2 weeks, I would very much likely enter at $82 or $7 lower from here. Like I said, by the end of the month. All right, and then one of the best sectors, I was just praising it last week, XLC Communications, a leader of the sectors. If you could only own one, I really love the action that's been going on in Google and Meta, and that is what makes up the XLC, honestly. Looks great. This is very much market. I'm not going to chase this up here at 119. It is overbought, 80 RSI. Folks have been in love with Meta for a long time, and now the Google story is really, really, really working with the investments in Gemini and the usage there, and they're expanding cloud and everything else. So things are looking really, really good at Google. XLC, I hate to say a thing, pull the string in my back and like I say the same thing. Give it about 2 weeks. Just don't love it. Everything is basically extended. All the charts are looking the same. We're talking about that kind of highs here previously, and then a nadir, a swoon here, and then a breakout above, kind of like a cup and handle. You're seeing the same chart everywhere, pretty much. I would sit this one out for about 2 weeks and then enter right around the 113. Something tells me you do get that prior resistance level where it broke away. I do think you get it, and it very possibly happens from the Fed on this week. I don't really know. Caleb, I see your question. You're asking about Uber. I will check that out, my friend. You have to wait till the end of the program. I will happily look at Uber. The down moves this week. Where are we at? Okay, the losers today. Absolutely risk on. The staples, they hammered it today. You may not think so. Down 1.15 is not a big move. XLP doesn't really move like that. This is Walmart, Campbell's Soup, all that stuff. I thought it was a little bit overdone. This 200-day moving average has been, I'll call it somewhat a brick wall since the beginning of summer. All right, since Memorial Day. And it's right at 80.80, and we are below that now, handily. We're at the lowest point of the XLC going back to the week of the SPY 52-week lows, and they dumped everything, including the staples. It wasn't, even a defensive time. They sold this thing also, and this group actually peaked in March. If you remember before, Liberation Day and all the tariff scare and all that, that's when this group really peaked. And right here in the chart, I still think it has. It's interesting. Every chart I'm looking at says, give it 2 weeks extended. This obviously is not extended. Remember we said before, the charts in many places of the market here, a previous high and then a base, a swoon in April, and then a breakout. Not happening here. I think this actually has, with the market pulling back, or something maybe Powell says, I think this has a decent-ish week. I'm not saying it's going to go to all-time highs or anything like that, but I do think this has an upside momentum, even giving this ugly weakness. I mean, this thing is legit at 5-month lows, so I don't like to go up against that momentum, but something tells me this does want to get to 81 quarter. I do think it wants to straddle that 200-day moving average. I don't think this is the end. Ugly trading, and though I will add an RSI trading in this group from August 25th. Ever since this collapse, that when it was down 1.7%, it really has not been able to regain its footing, the staples. And stochastic momentum mix really as low as it's been. I think it will cover. It might get a little bit ugly here. I don't think the 79 handle will break. You can probably sell those puts. It's not going to pay you anything. I wouldn't just go straight call. So no really trade here, but I do think it goes higher. If you must get in an area, I think it goes a little bit higher, but I don't want to. I'm not a super contrarian trader. And then the next area today that got hit, medical devices. Healthcare was overall down, but the top area that got hammered was the medical devices. This was down 1.5%. Almost similar. Look at this 200-day moving average, a brick wall. It is flat at 61 even, and we're below it now in the medical devices. I think this bases this week at worst, $60, maybe $59. And this group can get volatile, but I do think that'll hold the 59. And then I do think it wants to make a move to top 62, probably closer to 61.5. So tighter if you're more tactical trading. This thing has been essentially range bound between 63 and 59 going back from April. So, and it peaked in February. So a weird chart. Also, the medical devices today, they hit it lower underneath its 200-day moving average. We'll see if it recovers. I think it has a decent-ish week and a half. So there you go. So I'm kind of not correlated things with the market. I see potentially going up. Medical devices and consumer staples, not sexy areas at all. But these communications, metals and miners, uranium, these things have mega lifted. I personally would not chase them here. I would tell you if I would or should you could. All right, top three gainers of the past 5 days. Top three gainers of the past 5 days. Number one, obviously because of the surge today, but it's had a nice couple of days before that, is uranium, up 10% over the past 5 days. Yes, much of it coming today, but it's had a couple nice days before that. I'm going back to the 10th of September. No better chart than uranium in stock or in ETF land rather. Any place. I'm considering Ethereum. What I have next on the chart, some really high flyers. None better than uranium. So congratulations if you caught this move all the way to 52-week highs. You got a little bit ugly here. I understand some exits, but you got to give a volatile asset like this some wiggle. I get a break here in many instances under 39 would cause many to kind of freak out. I actually had a lower Bollinger Band close, a flush here on August 20th that sank it to 35.64. But it really did hold. That's exactly the same low it had in July and the area of the gap up from June 16th. So just love to see it. And it's the best place to have been in the past 5 days. So congratulations, uranium. On its heels there are the junior silver miners. Okay, it's up 8.5% in the past 5 days. It had a nice day today, up almost 3.5%. That is a new 52-week high. They were upset that the bell rang, as you can tell here. 10 cents off the highs. This thing's an 83 RSI. It really started accelerating August 28th here, when we started getting to $18 and $19 and $20, and 21 comes after, and that's where we are today. I personally would not chase this here. Give this 2-ish weeks, and then a much better level of entry is 1870. But congrats if you're in this one. It has become an area of a lot of investor dollars. And again, we highlighted this the other on Friday. This thing's been a really nice trading, I would say. Very outperforming in many areas from that $13 half area on June 2nd. It's really been off into the races. Very few opportunities to get this on pullbacks. All right, so it's been the second best area this week after uranium. Third best area, South Korea is still hanging in there, up 7%. It's the third best place to be. And here you go. That is a 52-week high. The all-time highs came in 2021 during those fun, not so fun COVID days, when this thing touched $96. But right here, and again, that immediately to me, and I think this is the way a lot of people are thinking, is catch-up trades. You're having international, in many areas, IFA all-time highs. You want to see where the laggards are, especially from outperformers, and this is one. So when I look at all-time highs from 5 years ago, 15 points above or whatever it was, that's nice to see. That's 20%, and this is where fund managers and allocators are going. Right here, you know what I'm going to say. Look at this. My gosh. Up 67 bips today, 0.2%. 4 outer Bollinger Band closes. That's insane considering a stock wanted to do a nation ETF, is stuck between 75 and 70 from June until last week, and now it's going to 79. And that literally, you can visualize the energy of just ponging back and forth, and woof, getting that energy. All that being said, I think more natural is to give it about 2 weeks, and I would rather enter this probably at the place of previous resistance, right at 75 even. Try to have it kiss away these gains. Maybe have a beta-related sell-off if you get a digestion of what the Fed does this week. So, but congratulations if you're in this. South Korea, absolutely stupendous since mid-April, and really even just more conviction to get it mid-May at $58. And here you are at 79. Thing probably had to new all-time highs in several months. So, 3 best areas in the market in the past 5 days: uranium, junior silver miners, and South Korea. If you have that in your portfolio, congratulations. I think I'm dying. All right. Number one, loser of the past 5 days is the homies. Home construction, and it got hit again today with all-time high market for SPY, Qs, and everything else. This chart's nasty. Excuse me. The highs for the homies came, my goodness, hard to believe, basically almost last Halloween time, when there were pumpkins on the ground. It's not just $130. And now, yikes, here the Fed cut. The group sank 4% that day on December 18th. And really, a nail in the coffin came in April. And now, really, that was pretty rejection, July 23rd. And now, August 5th, a change in the guard of home construction in this rally. It's really, really, really trying hard. I believe it. I think it's going to rally like many, almost all areas of the market. But short term here, in terms of entry, I think you want, if you're going to get in this, and I like it, I think this is enough to show to me that has momentum. I wouldn't chase it up here at 118, but I would give it time this week. This is interesting. I would give this time to base this week. Be careful. You have a lot of market factors at work. Fed cuts rates. It's obviously going to affect home construction prices. It should go higher with market pulls back. This may go with it. I want to give this week to base, and then if you can get in at a 111 even, I like your risk to reward. I actually don't think it's that bad. If you get an ugly sell-off and this group gets really smacked, it's probably going to 106. I still don't think you absolutely lose your shirt there. But I think if you get an entry at 111 even, I kind of like a 111, 118 call spread, maybe for December. Check the price and the liquidity of it. But I think that's very possible. Be careful, though. This will be affected, obviously, by what Powell says this week. But home construction, give it a couple of days here to base. I like entry around 111. And it looks like it's going to try and pinch its head and meerkat and get to that 117, 118 level. It's going to be probably frustrating, though, over the next 2-ish weeks. It's had a nasty week this week, though. The worst area. So are they sniffing something out ahead of the Fed? We'll see, but this is down 4.5% in the past 5 days. They're averaging almost down 1% a day. Today, no different, down 1.3%. So this thing's looked ugly after it got that clean rejection at 118 on September the 5th. We came back in a couple days after Labor Day. It hit 118 even, and they said, no, sorry, Bob, and they smacked it to Chemade right here. I think it's going to have that meeting with 111 even. And then that should be where you want to get some spec involved. All right. Second area, we looked at this earlier, so I'm not going to beat a dead horse on this, but medical devices has been the second worst area in the market here. So this one on the 9th, it went to 62.80, and they rejected it, and it got to Chemade all the way below its 200-day moving average. We already talked about this one, IHI. I think it'll be okay, right around at lowest 59 handle will hold. And then I do think it will traverse that 200 moving average and get to 62 for more, frustrating trading. Frustrating trading. That sounds like a name for another show. But that is what IHI looks to be doing. It's down 3.33% over the past 5 days. Not so great if you're long Medtronic and those kinds of names. And then this one, I wanted to spend a little bit of time on this. The third worst place to be, VXX, which hit a new all-time low today. That is absolutely, wait a second. That's what it said from my provider. Hold on a second. I don't want to say anything in error. Did it go lower today on an intraday basis? Because vol was up. Okay, so it was up 70 bips today. I'm sorry. VXX, apologize. Take it back from the doc. I misread it then. The low was on Friday. This hit 33 quarter. Today wasn't up there. I saw some writers, some tech analysts write about that, saying everything is so strong and rallying. Even the VIX is up. And maybe it's just some insurance and policy protection puts rising in value ahead of Powell, some uncertainty across some different areas. Like I said, SPY did close up 0.5%. Volatility through VXX did close up, but this thing has gotten absolutely hammered. It's been the third worst area to be in after home construction and medical devices. It's not a ton. That's down 2.5% over the past 5 days. Today, trying to reverse that, up 70 bips. Short term, like I said on this chart, this looks to me like it'll base right around that 33 handle, a floor there. And then it looks like this will try and get to 36 even on a bounce, or a 2% move higher, and you might get it on the Fed. Who knows? Okay, Caleb, thank you very, very much for watching and for tuning in and for having to use your question. Let me go to your ticker and Uber. I'm guessing you are long. My goodness, I took an Uber last night, went to the Rise Against Papa Roach concert on Saturday, and took a very expensive Uber all the way home. But I was in the pit all night, so I'm standing. I'm going to be just, sitting and driving, not driving the rest of the way. I'll be driven. Uber, here we go. If you guys recall, these guys IPO'd in May 2019 at $36. Today's close is, we'll call it $99. Obviously, psychological marker. These stocks, when they get this close, they're 100 bound and then some. In terms of some fundamentals or market cap information, Uber now on $47 billion in revenue is a $200 billion company. My God, absolutely a behemoth. Wow, this is a stupendous chart. Overbought several times. It was oversold here. Back when the lows came in December, the Fed cut right here. Some very volatile trading for Uber last year. You could have got this at $59 on sale if you were doing some Christmas shopping the week before Christmas. And now, all the way up to 99. So now what? Dude, you were long. These guys report, we're not in a cycle right here with them, right? Yeah, they report, looks like November the 6th. I think, Caleb, you're going to have a nice week and a half here. I think this is going to go, we're going to get to that 1.0, even more than that. I think it's going to go to 1.01. Nice job. It's not so great. They were all-time highs, and you're not even at 65 in the RSI. I don't love that, and it is volatile. But look at the candle. This thing went to 99.08. So they sold it off, within 10 cents of the all-time highs at the end of the bell. When I see that kind of divergence, it lets me know, spidey senses, I could see it drop to the 21-day exponential just in a hurry. So don't be shocked if this does fall to 95 at any point, in the next several days. But I still think that's A-okay. This thing hasn't given you any kind of warning signal of significance since April 10th, and that's when the whole country had issues, the entire market, rather. So this thing looks good. Minus the divergence, but I don't love that. So it lets me know a quick fall may happen, but this thing's headed to 101, I would say, by, a week and a half. All right? I don't know. I don't like that divergence either. Yeah. So that's about it. It's interesting that Uber has not been able to break 66 RSI since the previous highs when it was at this level. So does it have enough gusto to go higher? I think you're looking at 101, like I said, in about a week or so. Looks great. And I think probably next level, in 2-ish weeks, when this has its consolidation, next level to get in will probably be 95, 96. So I hope you have a great cost basis. This thing looks like it's continuing to go higher. Maybe some hiccups short term, but this looks like it's going to break par or 100 for you little finance speak. All right, we will see you all tomorrow. Tune in tomorrow. You can ask, tickers like Caleb. I'll be doing all stocks tomorrow, so absolutely no problem, man. We will be looking at stocks tomorrow. Peace, y'all.